Hello guys, welcome back to the channel. So yesterday we talked about a few pairs that we had yesterday and how they are going to progress for the week. However, today we are going to be talking about something different, and that is how to draw your key levels accurately. How to draw your key levels well. Like basically I'm going to have a clean chart, and then I'm going to teach you on how to draw your key levels or your support and resistance well. So support and resistance is what helps you on how to locate or mark where you expect the market to go next. Remember, the market moves from zone to zone, so the only way to establish those zones is how to draw your key levels or your support and resistance accurately. Whenever you get your support and resistance right, then it is going to be easier for you to know where the market is headed next. Now, of course, it is not enough only to draw your support and resistance accurately that you're going to beat the market. No. What support and resistance helps you is just to know where the market will go, or where the market is going to get the momentum to push it to where it is going next. That is what we call support and resistance. Support and resistance, these are fundamental trading tools that have been used from way back. So together with trend lines, they have been so vital, and most of the traders today still use support and resistance in order to determine their key levels. So today in this video, I'm going to show you how to draw support and resistance accurately. So work with me. On the chart, I have, let me close this. So on the chart, I have a plain chart. I have a plain chart of Euro USD. Euro USD plain chart, and this is what you're going to be using to draw the support and resistance. It is going to be a step-by-step concept on how to draw support and resistance. So now, first things first, if you want to draw support and resistance, there are things that you have to put in mind. One, look at how the market has been trending and what are the turning points of this market. What are those areas that have been the turning points of the market? What are you going to do in this case? You're going to zoom out. When you zoom out, it's going to help you see the whole market, how it is. For example, this is the monthly time frame that we are on. My chart, it is on the monthly time frame, and the monthly time frame, I have zoomed out the whole chart, the whole market on Euro USD on the monthly time frame. As you can see, it is starting all the way from 2003. That is on my trading view. I don't know why I have only up to 2003, because I'm using a paid plan. Ideally, I should have more than those candles, but it is okay. That will help me still be able to draw my support and resistance. Since this is just an education video, it should be able to help you on how to mark out your support and resistance. So now, what are the first thing we do? Zoom out the chart to see the whole market for what it is or what it is doing. Now, after zooming out and seeing the whole market, the second thing you're going to do is you're going to mark the key turning point. The key turning point of the market. Zoom out, then mark the key turning point of the market after zooming out. So now, when you come here, let me see. Okay, so let me just delete it. Okay, so before you start marking the key turning points of the market, go to the line chart like this. If you go to the line chart, just come here. If you don't have this like me, just click on the drop down here near the candlesticks and then select line chart. It is going to be there. Click on the drop down and then select line chart. It is going to be there. But for me, I selected it as my favorite, so it is here. So you come here and click on line chart. After clicking on line chart, you are going to see now the actual turning points of the market minus the wicks. Remember, this is the monthly time frame. Actual turning points minus the wicks. So what happens is you're going to bring your line, this line here, the line tool, horizontal line tool. You come and put on each and every turning point you see. This is, we have one here. Put their line like that. Come to the line again. Look at the next turning point. We have one here. So now, when you're putting on this area here, you're going to put on an area that has many touches. If there is only one like here, it is okay, you can put on that one. But if you look at the extreme left here, you see that there is another touch there exactly on this one, which means that this price point, it is a turning point. Remember, we are in the monthly time frame. That means any turning point to happen on a particular point in the monthly time frame, it took like 1 or 2 months to form that turning point. It has to be significant. So now you come to the next one. The next one is this one here, but we are going to extend it a little bit up here to accommodate this 1, 2 here, instead of just putting it here. We extend it a little bit up like that to accommodate 2. So okay, when you extend it, accommodates even 4. 1, 2, 3, 4, 5. Accommodates 5, which is good. So get your line still. Come and look to the next one, which is here. Why do we go here? Because it accommodates 1, 2, 3, 4, 5. So you put it there. You look for an area that accommodates many touches. That is your turning point. So now extend it to fit these are the touches well. Good. So go back to the line and look for another area, which is here. Why here? Because 1, 2, 3, 4, 5 and almost 6 here. So that is the turning point. We get the line, come back to this area here. There. Why? 1, 2, 3, 4, 5, 6. I know the wicks are touching this one here. Come back to the line chart and then come to this area here. There. Why? Because 1, 2, 3, 4, 5. So I think that is enough. You don't draw many lines on your chart because they are going to confuse you. The most important support and resistance are the ones that are near the price point or the current price action. So now, after putting all those lines, come back to your candle charts. You see, when you come back to the candle charts, you see that those turning points have been respected several times. There is here, there is here, there is here, there is even here. We have broke down, came up, tested, we went up, tested up. Now we have rejected, the current price action has rejected this area, it is coming down. You will see that these points are so accurate. So now that is not all. When you finish, you come to the weekly. Now you want to refine. Remember, these lines are many, so you cannot trade with all these lines. The chart is going to be cluttered and you want to be able to see what you want to see. So we shall come to the weekly time frame. When we come to the weekly time frame, we want to refine these lines. We remove others and now we draw the real support and resistance using the box tool. This tool here, it's called a rectangle tool. Good. So come to the weekly time frame. When you come to the weekly time frame, do the same thing. Zoom out like that. And now on the weekly time frame, we are going to look at the current price action. That is where we're going to draw our support and resistance at. These other lines, we shall remove them because they are going to confuse us. they are very far away from price action, because guys, think about it. Price action to move from here to here, we shall need another like 3 years. So why do we need this level here when actually price to reach there will need 3 years? We don't need it, so that one we shall delete it. It was just for study purposes. So we come here, this one we can need it, but remember what I told you, price to move from here to here, we can need like a full year or even 6 months to move from here up to here. So we can remove it or we can leave it, but for purposes of this video we can remove it because it is not required. So now the 3 points that we have remained with that we need, it is this line, and this line. You see how now they are becoming clean. So now you're going to use the rectangle tool to draw support and resistance. So we are going to go back to the line chart, get our rectangle tool. Remember we said the areas that have the most touches. Get our rectangle tool and then draw a box over those touches like that. You see that box? Then after, delete this line to make it clean. So now you see that box I've drawn. Just try to make it clean. Extend it to accommodate this area. Like that. Okay, so you come to this area also, draw another box, or you can just duplicate this one to keep it neat and identical and put it here like that. Then delete this one. So you see how they're becoming clear. We are deleting the line because we already have the information from the extreme left. We just now we're trying to make the chart clean, and then we have now the last one down here. You can choose to draw the last one down or not. Why? Because price action is still far away from this area here, because price action to move from here up to here, we shall need another 6 to 8 months. So why should we draw it when we have 8 months to go? So the only price action we need, the only support and resistance we need, the ones we should be using right now are the ones that are near price action, this one and this one. And now guys, you have accurately drawn your support and resistance. It is very, very easy and simple. Just look on the left, look at the key turning points of price and then draw them. So there you're set to start now your analysis. So you can just refine them like here. Why do we refine them? Because on the high time frames you see a few candles, like on the monthly you see 1 or 2 big candles, but when you come to the weekly you see very many small candles. Same thing when you go to the daily, they're going to be very many. As you drop down the time frames, the number of candles increase. So now you have them. So these support and resistance are very key and clear. Why do I say that? Think about it guys. Price came, hit this area here, which is support, bounced off, and then came back, tried to go down, bounced off a little, and then broke it, retested on it with this candle here. Remember, these are weekly candles. Retested on it and then fell down. When it came back, it broke up, retested, went up to here to the resistance. When it reached here, it did not break. It never broke the resistance. Came back down to the support. When it reached the support, never broke the support, went back to the resistance. Tried to break it, refused, came back down, never reached the support, went back again to the resistance. Tried to break it once, refused, break it the second time, refused, it came back to the support. Tried to break the support, yes, it managed to broke down, but still came back, which means this area is significant for price action on the Euro USD. When it came back here, retested, now it has gone back up here. And look what is happening. It is rejecting this support area here. Which means chances are very high we are coming down here. Now, this is where it becomes interesting. Since we know that we are coming down here, how many pips do we have between here and here? This is how we project 500, 400, even 1,000 pips in the future. And then we go on the lower time frames, trade within the direction of those pips, and hold our trade to accommodate all those pips that we have forecasted in the future. This is how we do trading, and avoid over trading or trading every day that comes. So from here to this support here, we have 670 pips, almost 700 pips, guys. So that means from here up to here, you have 700 pips that you're looking at. So you're going to go, now that you know why do we 700 pips, we say 700 pips, is because we move from zone to zone and we have accurately drawn our support and resistance. So that means when we go to the lower time frames like the daily and the 4 hour, I normally execute on the 4 hour and the daily. I don't go beyond the 4 hour. The moment I reach on the 4 hour, that is where my execution happens. I just go to the 15 minutes for refining and get some smaller stop loss, but the main execution is on the 4 hour. So when we go to the 4 hour, we are looking for only sales. We are looking for only to sell. We are not looking for anything like buying or whatever. Maybe if you're a lower time frame trader, there you can be looking for small buys before you can sell. But me, I'm not looking for any buys in this market. All I'm looking for is sales. So when we got the lower time frame, you're going to be looking for sales. So what we expect is this price to come a little more and reject this zone, and then we start dropping up to this area here. That is around 600 pips, guys. Think about it. You place a trade, you are aiming at 600 pips, and then you let the trade run. So for you, your case is to always come on a daily basis and see how price has moved. If it has moved more than 100 pips, lock in your profits and move. Lock in your profits and move. Just come, see where price has reached, lock in your profits and move. Every day, every day, every day. And that is how it is going to be. So now you go to the lower time frame, execute your trade, put your stop loss, put your take profit down here, and wait. Wait, even if it takes 2 weeks, 3 weeks, 4 weeks, 1 month. Just imagine, guys, would you rather place a trade expecting 600 pips and then wait, just sit and do other things for the next 30 days? Or would you rather be in and out of the market every day? This is what trading is about. It is supposed to be about freedom. Get your freedom, place your trades, and go and do other things. Go and do other businesses. Go to your work if you have a 9 to 5. Go to the beach. Just go and do other things as the market is working for you. Guys, this is how we are supposed to trade. Let the market work for you. Instead of you being in the trade in and out every day, you've lost money, you recover the money, you get profits tomorrow, you draw down the other day. All for what? When the market can actually work for you. Do your top-down analysis, mark your support and resistance well, and let the market work for you, guys. You see how it is simple? So right now, we have marked out our support and resistance very well. So now, we drop to the daily. So when you come to the daily, what do you see? What do you see in the market? The daily, it rejected this area here, our support, came down, and now it is going back here. It is rejecting again this area here. So what happens? What do you expect after that rejection? You're expecting market to sell, but can you sell right now? No, because there is no setup for sales. Is there a setup for buys? No. Yes, this is a green candle, but we don't see any setup for buys. Your strategy might be showing you any setup for buys, well and good, but me, I'm not buying in this market. I cannot buy in this market. So what I'm going to do, I'm going to wait. I'm going to go to the 4 hour and then wait for sales, for the sales setups. And how do I get the sales setups for entries for sales? Guys, it is simple. You see here, this looks like a double top. This one, the market is starting to show signs of what? Dropping. However, me, I'm not going to enter there. I like to clear out all the possibilities of this market still being in an uptrend, because think about it. This market can just come here, bounce off this area here of support, and then goes back up, or even break here and continue. You never know, anything is uncertain in the forex market. So in order for me to enter for buys, my entry strategy is simple: counter trend line. Counter trend line, guys. Go and watch the previous videos about the trend lines. You'll see. I'll come here, draw a counter trend line to this area here, like this. Just make it neat. Good. Your trend line doesn't have to be so steep or stick hard on the price action. So you'll draw like that. Accommodate more wicks. Okay, there. So now I've drawn my counter trend line. So price can do whatever it wants to do. It can tap here, go back, do whatever it wants to do. I don't care. I will be patient. But the moment you see price breaking out here like this, you see a candle closure besides or below this trend line. Now that is my confirmation that we are going down. After that, still I'm not entering right away. I have to wait for a retest back on the trend line here. Now that is when I go to the 15 minutes time frame to look for a change of character to the downside. Change of character to the downside, and then I'm going to enter for a long sell up to here. Guys, that is how I like to trade this. I'm going to wait for this price to come and break here. Then we go for a retest, and then from that reset, drop to the 15 minutes time frame, wait for a change of character, and enter for a sell, a long-term sell. Put my stop losses about here, because now this area is being cleared. Put my stop losses about here, and then we push for a long-term sell up to here. You see the power of support and resistance. Why do I know that we are coming here? It is because it is the next area for price action to go. Remember, we move from zone to zone. However, first retracement, 100% retracement. This is first take profit, 100% retracement. After taking profits here, move my stop losses to around here. By then, I'm already in profits. So I'm going to let this trade run for as long as it wants. Me, I don't care, because I've already secured some profits, I've banked some profits, and now it is upon the trade to do whatever it wants. It wants to run up to when, I don't care. Me, I'm already safe. I've removed my profit, so whatever I'm in is just surplus. So guys, that is how we draw support and resistance and combine it with trend lines and entry models to make sure that we extract maximum profits out of the market. If this video has been helpful to you, you can like, you can comment. Also subscribe to the channel for more subsequent videos like these ones. I'm going to be sharing you premium content about forex trading, and I know you're going to like the content about forex trading that I'm going to be sharing. Every day there's a video that is going to be coming out about forex trading. So now yesterday you learned about trend lines and how to draw them. Today you have learned about support and resistance. We are going slowly by slowly. Tomorrow I'm going to be talking about something different, maybe to do with entry models. I don't know. Anything that will come to my mind, or anything that you can request in the comment section, and then I can talk about that. For support and resistance, you're clear. I'm going to give you one more example on just how to do support and resistance, and that will be that. So for today, I think you know on Euro USD what we are expecting. And guys, if you follow this strategy very well, it is going to be easier for you to trade forex. It just requires patience and knowing what you're waiting for or what you're looking for in the market. You see with this 4 hour here, for our 4 hour candle to close below this trend line, it has taken 4 1 hour price action candles to close below here. So it is not a joke. We shall wait for it to close below, come and retest. When it retests, put our stop losses here and let it run all the way here to the next support. Guys, this thing is simple, but only if you master it. As long as you've mastered it, you're safe. Kindly subscribe to the channel, like the video, and also share to those who don't know how to do support and resistance. The video might be helpful to them. So I'm going to give you one more example on how to do support and resistance, and then we shall call it that. So I think I'll get another pair. Which pair should I choose? Random pair. Let me try this one here. chef JPY. Because someone will say, oh, but you only trying on the majors, why don't you try on the minors? Okay, this is chef JPY. So I'm going to just clear everything and have a clean chart. So this is chef JPY and this is the monthly time frame. So now see how tricky it is. You look at the monthly time frame and be like, how am I going to draw now? This thing is a little bit messy. Okay, so I'm going to show you how it is simple. Remember, rule number 1, zoom out and see the whole chart the way it is. We have zoomed out. This is the whole price action from 2005 for chef JPY. So now, what is the first thing to do? Zoom out. The second thing is go to the line chart. If you don't have the line chart here like me, come on the drop down and then click on line chart. I've clicked on the line chart, and now the third thing to do is get your horizontal line and mark the turning points of the market. Here we see this one, this one, this one. So this is a turning point. Make sure you accommodate all the touches. The next point is here. That is a turning point. The next point is we have another one here. Why here? You see 1, 2, 3. Why here? 1, 2, 3. The next point is here. The next point is here. You see how it is simple? Very simple to draw these touches. If you want to learn how to draw them, you can contact me in my inbox and I can teach you how to draw them. Very simple. Just look left. Where else? Here. Then someone will ask, why did we draw here? Oh, yes, here because the price turned, but then it is only one. There is no any other touch on it, so we can just ignore it for now. So that is the monthly time frame. If you finish drawing those lines, come to the candlestick chart. Now, what is the next thing that we need? The last one is here, where price significantly went down. That one, that's the tip of the market. So now, what is the next thing to do? We look for areas where we have current price action. Areas that have current price action. Those are the areas we concentrate on. Because think about it, guys. You're not going to trade in the areas here, down here. No. You're not going to trade down here. No. Because the price to move, this is a monthly time frame. Price to move from here up to down here, you probably need like another 10 years. So why would you mark out a level which is going to be traded in 10 years to come? So you'll delete those ones that you don't need, like this one, this one, this one, this one also, this one also. Yes. Now this one, it is okay. This one we can leave it because price will take like a year to come here. Yes, but it is not that far. And then this one, price can take like 2 months to come here. So this one we need it. So now, when it comes to line chart, is there any area we have missed? Yes, this one here. Get a line and put it there where there is current price action. Good. So now I think this one we can also delete. Don't need it. Okay. So come back to our candlestick charts. So now what happens is we go to the weekly, drop down to refine now these areas. You see, when you drop down to the weekly, you see how they are clear? You see how they are clear? So now here is when we use the rectangle tool to mark out those support and resistances. So you shall come to the line chart to make them clear. Use the rectangle tool and then we mark out. I think we shall start with this one here. This one, remove it. Then there is one down. Just duplicate this to make them uniform. There is one down here. I think it is here. Yes. You see, you have now drawn your support and resistance. The upper one, we shall not draw it because price action to come here, it shall need to break here first before it can come here. But think about it, it can come here and drop down before it can go up, or it can come down, go up, then break to come here. So this one we shall draw it only when you need it. The only two support and resistance you need are these ones. You see guys how the things are simple. You see how the things are simple? Very, very simple. Put on your candlesticks and adjust accordingly. So this one, I think this one is okay. Yes. So now you have your support and resistance. Remember, this support and resistance are happening on the weekly time frame. Best believe they are going to hold. You see, we broke, tested, went up, come back, we did not break. Went up, came back, did not break. Now we are going back up. And when we come here, trust me, there's going to be a reaction. You see, that is how simple the support and resistance are. Very, very simple. You want to draw them? You can ask me. I'll teach you how to draw them. But this video alone should be enough for you to learn how to draw support and resistance in the right key areas. So now we have drawn them. So what next? It is showing that the market has bounced here. It is going up. So now we shall come to the daily to see more information. You see, when you come to the daily, you see guys what I'm talking about. Very, very clear. So now you know that we have left this area. This is where we are heading. So what is your goal? Your goal is to count the pips from here to here. That is around 300 pips. 300 pips. Now that you've known 300 pips, you're looking for an entry model to take you up to this area here. Very simple. That is support and resistance. That is how you know where the market is heading, or the next bus stop, where the market is going to stop next. Support and resistance. You know that when it leaves here, this is where it is coming. So it is now upon you and your patience. How patient are you? How long can you hold this trade in order to achieve your target? So now that we know that the market has broken here, it is coming here. So what do we do? What next? We are looking for an entry model to take us to this area here. So this is the daily time frame. I'll draw a trend line. I like using trend line because trend lines will show you how the market is moving and where it is going to. No, you see, you don't have to rely on one trading tool that, oh me, I only use support and resistance, oh me, I only use trend lines, oh me, I only use supply and demand. You put these confluences together in order to drive your agenda, to show you where the market is going. If you use Fibonacci, trend line, support and resistance, supply and demand, and all the things are aligning and they are all showing you that the direction is this side. Guys, trust me, it is going to go that side. It's going to go that side because everything almost support has told you this level has hold, we are going up, and it is on the weekly or daily time frame, we are going up. And then supply and demand is showing you there is a fair value gap somewhere, there is an imbalance somewhere, and there is a demand zone somewhere around there. It's showing it is going up. And then when you put the Fibonacci, the 50% or 6.1% is aligning in that area, guys. Which other confluences do you want? They are showing you are going up, and then you see the bullish engulfing candle on that demand area, guys. It is going down. So now when I draw my trend line here, it is showing me that this area has held, this trend line has held this price action for how long? Let me get from here up to here for 38 days. That is worth a month and 1 week of price action. Trend line has been holding this price action. So now, one is that I would expect, since we have hit there's a supply zone here, I would expect this price action to come and drop here, drop on this trend line, test it a little, and then shoot up there. That is the ideal case scenario that I would want. But it is not about what I predict, it is about price action. It can just come, break, retest, and then come down. but the most likely scenario is to come and test this area and we go up, or it might just refuse to come and test this area and just keep on shooting up. Price action does whatever it wants, but for us, our job is not to predict but to react. So we can assume that it's going to come here, but we do not trade when we assume. At that point of assumption, we wait for a reaction after trade has done what we anticipated. So now I will drop to the 4 hour to see what price is really doing on the 4 hour. When I come to the 4 hour, it does not give me anything significant. Broke this area here, retested it with this week, and now it is going up. So this market is too linear, so I'll just wait because I can't see any trend lines that can be drawable. I just wait for it to kind of have a significant pullback down here. Let's say this area here, if it can pull back to this area, if it can pull back to this area here and make a base, and then I can send it up. But for now, this is just like a falling knife. You jump in, it is going to burn you. You cannot jump in here, you will be burned. So we shall wait for a pullback here and then we send it up. If I put the fib from swing low to swing high, swing low to swing high, where is the swing low? The swing high. Okay, it has not stopped, but when I put it up to here, up to this week, you see the retest is around here. The 50 fib is around here. So this market is this one, we just wait and see what will happen next. But we know it is going here. This is the beauty of the top down analysis. We know the market is going up here, up here. However, how do we take advantage of it? We have to wait for a significant pullback, guys. If the pullback is there, we are not entering. If the pullback is not there, we are not entering. We shall wait for a pullback for this market to form a base here. After forming a base here, now we can shoot it up. And think about it. If it comes to form a base here, we shall have almost 500 pips, 400 pips up. So it is an advantage to wait for it to come here. If we do not wait for it and enter it from here, you guys, you're going to be burnt. This is how we trade. This is how we make that analysis. This is how we use support and resistance to reach at your goal. So guys, that has been all for today. Kindly subscribe, share, like and comment. Subscribe to the channel such that we can grow our audience. You can also comment in the comment section and tell me what you want me to talk about next in the next subsequent videos. But for today, that is all I have. It has been about how to draw your support and resistance accurately. I hope you have learned something in this video. Till next time, peace.